All right, so the stock market has had this massive run up. And now the big question on every single investor's mind is, well, what happens next? I mean, think about it. The S&P 500 has been on an absolute tear, right? We're talking a third straight year of double-digit gains. So you have to ask, can that momentum possibly last? Well, heading into 2026, Wall Street seems to have a surprisingly, almost shockingly, unified answer. And just take a look at this. The consensus is, well, it's crystal clear. The experts, they see the market continuing this exact upward climb, right on through 2026. Some of those targets are pushing way into brand new territory. So what's the headline number they're throwing around? A solid 9% gain. Now here's what's really wild about that. If it actually happens, that would be the fourth consecutive annual increase for the market. I mean, that's a streak we haven't seen since the wild days of the dot-com boom in the late 90s. Okay, so what in the world is driving all this incredible optimism? Let's dive in and really break down the core arguments behind this massive bullish bet. First off, you have to understand this is, well, it's almost unheard of. We're not just talking about, a majority of people being bullish. We are talking about everyone. Every single major strategist is on the same page here, predicting the market will end the year higher. That just doesn't happen. And to put an even finer point on it, the number is 0. That's the number of strategists predicting a market decline. Not a single one is calling for a downturn. Now, that level of agreement is incredibly rare, and it tells you just how strong the belief in this rally really is. But you know the old saying, when everyone's on one side of the boat, it's probably a good time to start looking at the risks. And that's a crucial point, right? This optimism isn't completely blind. Forecasters are very aware of the potential pitfalls, the things that could change this rosy picture in a real hurry. I love this quote from veteran strategist Ed Yardeni. He says, "I'm worried that everyone else seems to have become optimistic." And that just perfectly captures the contrarian fear, doesn't it? When there are no bears left, it can be a huge warning sign that maybe, just maybe, the market has gotten a little ahead of itself and is vulnerable to any bit of bad news. So the worries they're watching really fall into a few key buckets. You've got the big one, an AI bubble deflating or popping. I mean, valuations are stretched to levels we haven't seen since the year 2000. Then there's always the risk that the Fed has to get aggressive again with interest rates. And of course, you can never rule out a geopolitical shock or some political turmoil that just throws a wrench in the whole work. JP Morgan's outlook actually puts a number on what is probably the biggest risk of all, a recession. Now, their base case, about 65%, is that we avoid one. But look at that other slice of the pie. They still see a pretty significant 1 in 3 chance of a U.S. recession. And if that happens, it would almost certainly bring the market down with it. Okay, so despite all those risks we just talked about, the bulls still have a really powerful case. It's basically built on 3 solid pillars that are kind of like the market's engine room right now. First, it all starts with this incredibly resilient economy. Forecasters are really leaning into this idea of a soft landing, not a recession. Second, you've got supportive policy. The markets are pretty much expecting 2, maybe 3 rate cuts from the Fed. But the real fuel for this fire, it's earnings. Corporate profits for S&P 500 companies are forecast to grow by a super healthy 14 to 15%. That's huge. But here's the thing. The story for 2026 isn't just more of the same. No, the real theme that everyone's talking about is a major shift in market leadership, a real changing of the guard. In fact, analysts are calling it the Great Rotation. Think about it. For years, it's been the Magnificent Seven and other mega-cap tech stocks driving pretty much all of the market's gains. Well, now the rally is expected to broaden out. Other sectors might finally be getting their moment in the sun. And this table really shows us how that rotation is expected to play out. Look at the outperform category. We're seeing sectors like industrials, which are set to benefit from stuff like infrastructure spending and the AI build-out. Healthcare looks pretty attractive too for its defensive qualities and, frankly, more reasonable prices. Now here's the interesting part. Notice how information technology is now rated market perform. It's not because tech is suddenly doing poorly, it's just that so much of that explosive growth is already priced in and other areas are finally starting to catch up. All right, so the big question is, how do you take all of this information and translate it into a smart strategy for the year ahead? The playbook for 2026 really seems to be about adapting. The biggest takeaway is probably diversification, but specifically diversification beyond just tech. It's about finding those second-order winners from this whole AI everywhere theme. You know, the companies that are actually building the data centers, not just the ones making the chips. It also means looking for value in some unloved areas, and, importantly, keeping some defensive positions like healthcare, just in case that wall of worry we talked about starts to crumble. And that really brings us to the final fascinating question. With Wall Street's consensus being so overwhelmingly bullish, is 2026 going to be the year that proves the crowd right yet again? Or is this very unanimous optimism the exact reason a contrarian, a bet against the market, might just be the one that pays off?